Well, welcome to everybody. Welcome to our mortgage live stream. I think we're online now, which is great. Zoom is connecting to YouTube and everyone's out there listening, so that's great news all around. Hope everybody's well. Here in Cheltenham, we've got the Cheltenham Festival starting this week. The town's filling up with people. It's getting very exciting and very, but just lots of energy, lots of money, of course. People save up for years to come to the festival. And that's all good things for the economy as well, which is great. So live stream today, got a number of key issues for you, focusing a lot today on changes in technology, but also prospecting for new business as well, if you're a mortgage advisor. I'm Paul Archer. You can contact me at paularcher.com if anyone wants to talk to me about anything to do with mortgages and financial services and selling, all those good things. So let's get cracking then with our first topic of today, really, which is the budget. Now, here in the UK, we've got a budget occurring on Wednesday, I think it is this week, the budget. So I'm looking forward to the budget making a huge difference to the way things operate. I don't know if it's going to be a massive difference, but the budget this year is being operated by the new Chancellor, a guy called Rishi Sunak, who's a Yorkshire dude, actually, is Rishi. And he's a new Chancellor. And he's kind of knocking on the door for number 10, really. They sacked the old guy because he had a few of his independent ideas, apparently. But Boris likes to control things centrally, and that's fine. He's got a big majority, he can do it. So he's brought in this new guy. Now, what's he going to do then in the budget? Well, nobody really knows yet. But the big thing, though, is that they're going to increase borrowing. And I think for the mortgage market, that's a good thing, because if you increase borrowing and then spend the money properly, that generates the economy and makes everybody feel good. We'll talk about that more in a second. So they're going to increase borrowing by large amounts. So let's talk about government borrowing, really. Talk about gilts and all those good things. Now, the government said they're going to increase borrowing. The bond markets have said, yes, please, we're ready to take your demands now, or your new gilts that you're going to launch on the market. Gilt yields are very low in this country. They're 0.4%. And the whole point is that the government can't just keep borrowing. They're changing the fiscal rules now. Now, the fiscal rules are funny old things. Let's put a little title up here for you. We've got a sort of budget going on, haven't we? The fiscal rules are funny things, really, because they determine how much money the government can borrow. Now, they're not really rules set in stone. They just give governments or chancellors a bit of a guideline, really, about what they can borrow. Now, they're going to change them. They're going to change the rules to allow more borrowing. That's the whole point behind it. So the government have no barriers to stop them from borrowing. So how much then is being borrowed at the moment? Well, the deficit itself has come down dramatically. If you looked at the figures, in 2009, just after the crash, or when the recession was going on, we had a massive government deficit of about 10% of GDP. Now, GDP is gross domestic product. Remember, that's the amount of the economy going on in the year. That's the turnover in the economy. So 10% was a huge amount of money we were borrowing. Now, they got that right down now. So 2020, it's around about the 2% mark. So they've done a good job. They've brought borrowing down. And the other thing about borrowing is it's very cheap now. That's the big thing. It's cheap to borrow money. The government can issue gilts on the market, and they're very, very cheap. The actual bill, the interest bill, is hardly anything at all. If you take a look at government expenditure, there's a nice little pie chart there for you. Now, this represents government expenditure. There you go. Do you like that, do you? Now, that's like the armed forces, the NHS, welfare state, etc. It's government expenditure. Now, the actual proportion now of interest on government lending is tiny. It's about let's get this right. It's about 4.5%. Of the money that's coming off revenues. It's tiny, the proportion now, because interest rates are so low. Therefore, of course, the government can borrow more, hit it on the market will take it, government doesn't need to pay much money each month to pay for it, which is great, isn't it? So what else is going on then with the bond market or the government gilt market? Well, it's a huge amount of money now, the government debt, the public sector debt itself. It's approximately, I do have a little pie chart here because I've got my pie charts going on now. We're talking here about government debt. Total national debt is standing at £1.8 trillion. That's a huge amount of money, isn't it? 1.8 trillion. It's massive. And the thing about the debt itself is that it's used by pension funds, unit trusts, unit-linked funds, abroad as well, borrow money, and it's all money owned by institutions and funds and things. And the most thing about the debt itself is that the Bank of England have actually gobbled up quite a bit. They actually own about a quarter, and the numbers are, they own just over 400 billion, yeah, of government debt is owned by the Bank of England. Now, where did that come from, of course? If you're in the market, that comes from quantitative easing. Over the last few years, of course, government has been printing money. And what they've been doing is buying bonds from banks. So although the government's debt is huge, cleverly, the money they've been printing in the last 8-9 years, they've just bought the debt. So the Bank of England, of course, is owned by the government anyway. So they're kind of getting rid of their debt by printing money, which is a clever old process, really. And that's the debt itself. Okay, a bit of a background then for you on government debt and gilts and things like that. So it gets you thinking. But it's good news. If the budget does, if we do spend on HS2, for example, the new rail system and capital infrastructure, and we use UK businesses to help build and help spend the money, that's good for the economy. Gone are the days when you can have monetarist policies by reducing interest rates and things like that and taxation. It's all about fiscal now. In other words, borrowing money, spending it on the country, and that in itself will do the economy a lot of good. And yeah, I reckon, going out of Europe at the same time as spending a lot might actually do us an awful lot of good as an economy. We might be very bouncy and buoyant. So yeah, okay, update for you on gilts and all those good things. Let's see what happens in the budget, shall we, when it comes to it. Okay, let's move on now and take a look at some other topics in the news for you. Now, I read at the weekend about the digital broker Habito. You've probably heard of them, Habito, great company. And Habito got a good market share now coming through, great brand, and they're doing very well. Now, Habito, of course, are a digital mortgage broker. They don't have face-to-face operations. It's all done online, which is the way forward, of course. Now, Habito have decided they want to, their mission is to streamline the house buying process. So we're talking here about streamlining. So that's my sort of title, really, streamlining the house buying process. Now, the thing about the house buying process, particularly here in the UK or in England and Wales, is it's pretty slow and laborious. There you go, house buying process. It's slow and laborious, it takes time, it costs a lot of money, people lose properties, and it's not exactly the most enticing thing to get involved in. And if we want to increase the market and get more people to own their own houses, we've got to streamline the house buying process. And Habito have come in with this new product or service whereby they do everything for you. It's called the Habito Plus service, which sounds like an original name, doesn't it? And what they do is they obviously arrange your mortgage for you, but they do everything else. So they conduct the survey for you. They do the property searches for you. They draw up contracts. They deal with the money transfers as well. And obviously, they don't do it themselves. They've got a series of partners that do it. So the whole point is you pay Habito a big sum of money, and they take care of the whole thing for you. And cleverly, they've marketed this. So they've got this dude on the other end of the phone. There's your Habito sort of rep or advisor. And the Habito advisor is like sort of the case manager, the person who will handle things for you. And they'll do the surveys, and they'll get the lawyers involved, and they'll do the contracts, and they'll keep you posted, hopefully speed things along. Now, they're not charging huge amounts for this one, but it starts at sort of £2,000 for buying. So they're probably not going to save their customers money, because you can go and get a lawyer, you can get a surveyor, can't you? You can get the local council to do the searches for you. You can do all that for yourself. But they're kind of streamlining it. Whether it will speed things along, I don't know. Lawyers are still lawyers, aren't they? Although if you're going to have a big contract with Habito, you might want to speed things along a little bit. But it's a good time. Now, the point here, as a mortgage advisor, mortgage broker, whatever you want to call yourself, you can do this, and you should do. You should help the customer, if it's buying, selling you're involved in, by taking them through the process. As a mortgage advisor myself, I used to take people from the mortgage application all the way through to completion. I used to contact the lawyers and the surveyors and talk to people in plain language that they understood. So although you're getting a fee and proc fee as well, make sure that you take your customer through the legal process, the surveying process, etc. You become the case manager. You become the first point of contact. You can do it, and you should do it too. You don't need to call it a fancy service. This is what you do. It's not just arranging the mortgage. Remember, mortgages can be arranged via online means. You can go to Habito or anybody, get a mortgage. But it's when you get somebody to look after the steps involved, the whole process behind it. I think it's a good thing as well. So that's Habitos. I thought it was quite a neat little sort of situation going on there. What else is happening on the subject of speeding things along a little bit? And we'll keep this up on the whiteboard for you. Again, I read about a company called Skipton Building Society. Now, I've known the Skipton for a long time. Good company, good firm. Skipton, obviously North Yorkshire, in Skipton, nice part of actually. The Skipton Building Society. They've done a number of things recently to try and increase their profits, etc. Because, you know, as a mid-sized building society, they need to find their niche in the market. And what they've done is that they've brought in this new product, where they've piloted it really. And they've piloted this system with the credit agency Experian. And what they've done is they've opened up what they call open banking technology. So Skipton then, let's put them down here, right, they're using what we call open banking. And they've linked in with Experian, let's just put that up for you, the credit search agency. And they've linked up via open banking to speed things along. And open banking, if you want to know what this does, is where a bank, for example, will open up its systems to anybody who wants to have a look at them. So, for example, I have a bank account with HSBC. If I wanted to go and apply for a mortgage, I would say to the mortgage lender, look, you know, just talk to HSBC direct and they'll tell you all about my finances. Now, in the old days, of course, we would provide a bank statement, wouldn't we? But nowadays, the Skipton Building Society's computer system can talk directly to HSBC's computer system and get all the information they need. It's called open banking, opens everything up. So they go in, their computer talks to their computer, they find out what my payment records are like and what my direct debits are. And within like 0.01 seconds, they can get a complete picture of what I'm all about. And Skipton started doing it with Experian, which is a good start, because they can go straight onto Experian and check your credit situation before an application is even processed. Now, it's not rocket science. They do that anyway. But what you'll probably see is that Skipton will open up open banking to your bank account. It's a good thing. It's kind of a manual process they're working for, but they're trying to speed things along. And they reckon they can knock a couple of days off the house buying process. I think that's a good thing. They're only giving it to direct mortgage borrowers at the moment, which worries me a little bit. I mean, I can see this dual pricing thing coming back in again, where lenders, when they need brokers, they'll use them. When they don't need brokers, they won't use them. So be a little bit careful with that one as well. But I think what's going to happen is that in the future, if this works, Skipton will not only link to the Experian, their open banking will also link to bank accounts. So they'll go in and find out all about your bank accounts. It'll also link into the lawyers' systems. So that helps with the house buying process, of course. It'll also link in with, say, the land registry. So they know what's going on with the land registry itself. It'll also link in, say, to the local authority computer systems for local searches and stuff like that. The water board for flood searches. So you can see this Skipton thing using open banking to link into all these computer systems, which are part of the process. And the whole point is you do your application online, the computer then starts talking to all these different computer systems, gets all the information it needs in seconds, and it can speed things along. It's not far away. It's quite exciting actually to think about what's going on there. I like it. I think it's great. I really do. The future is orange, although you can't say that in parts of the UK. But there we go. Enough of that. So let's talk now about a more serious topic. Let's get more serious now, shall we? Let's get into prospecting. That's speeding the market along, and it's great if you're in the buying and selling market as well. And that's a fantastic thing to operate. But you're looking at getting into mortgages, or you're already into mortgages or financial services, whatever it is. And I get a lot of people contact me. Let's talk about prospecting before you. Let's put in the title up there for you, prospecting. It sounds like some dude digging for gold in the old Klondike, isn't it? Prospecting is key. Now, I get a lot of emails from people who are studying the CMAT, and they got a future ahead of them, and they're thinking, great, as soon as I'm qualified, and get my CAS status, my competent advice status. I'll set up shop, and I'll just wait for people to come in there and get my advice. And that's nonsense, absolute nonsense. It doesn't work that way. It doesn't work that way at all. You're not going to suddenly get reams and reams of business in any industry. It doesn't work that way. You have to work for it. You'll live or die. Sometimes you'll starve or feed yourself by acquiring new clients, by the way that you bring in new business to your company. You'll live or die by that, and we'll talk about that now. Now, Santander, big bank, of course. Santander, part of the old Abbey National Group years ago, Spanish-owned company, massive lender. They're having a few difficulties, like all participants in the market. They don't get enough footfall. They don't get enough people going into their branches. Not surprised, branches are a thing of the past. That time they all figured that out. Great big, 100-foot, square-foot branches in the high streets, with lovely armchairs, all that kind of stuff. It's a thing of the past. They just don't need it. They're not getting enough footfall going into branches, in other words, to get mortgage targets achieved. Their website is great, but it's not attracting the numbers of people they want it to attract. I mean, you might go onto Santander's website if you're looking for a mortgage, possibly, probably not. You'll go onto other things, and that's the point. So what they've done, Santander, is they've gone along and they've bought a company. They've bought a mortgage tech firm that snaps up borrowers from aggregators. So let's look at it visually, for example. There's Santander, the lender. They've got branches which are not working. So they bought a mortgage tech firm that snaps up borrowers from aggregators. Now you might think, well, what on earth's an aggregator? Now, an aggregator is a firm based on the internet that owns a number of websites, forums, blogs, whatever it is, which attract people. Now, if I'm looking for a mortgage or wanting to buy a house, I'm going to start going online. I'll go onto Facebook and various social media, and I'll get a link to somewhere, and I'll find a blog with information about mortgage products, maybe a Best Buy list or something, or where to get the right surveyor. Everybody likes to research information now online. They get their tablet out while they're watching telly, they're watching The Voice, and between Tom Jones and Ollie, they're clicking on there, finding out about mortgage. That's the way people roll nowadays, and don't ever think that's the way. They don't walk into bank branches in the high street anymore. Now, as they're going around the internet, searching for information, researching this, that, and the other, these sites will try and take your details and ask you, do you want more information? Do you want to speak to somebody? Do you want more data about this? Do you want this? Do you want this? And what they're trying to do is attract your permission for you to be contacted. And then what happens, these aggregators get all these email addresses of these clients that, or customers, they're not clients, who are interested to talk to somebody or to take it further or to get more information, whatever it is. And it's these customers that you can purchase. Now, Santander are doing it because they're basically getting all these new customers who go back to the aggregator goes to the tech firm, and they go back to Santander. Santander will help them. They'll probably have some 24-hour video link where they can talk to customers because they're in a position to do that. So if you're in some website in the middle of The Voice and you're finding out about land registry fees and the various costs involved, and say, do you want to speak to somebody now? Chat box or something. Oh, yes, please. So you'll go to Santander who'll talk and chat. And that's great. They got the money to do that. And the point is, though, this is where you come in, because as a mortgage broker, mortgage advisor, whatever you want to call yourself, you need new business. You can't go advertising on the back of video boxes anymore because nobody buys videos. You can't put an advert in the paper because nobody reads papers anymore. So what you can do is buy these things. You can go online. There's companies that will sell you these customers. They'll sell you. It's all done on bid auction basis, according to demand, and et cetera, et cetera. But you can pay them, say, £25 for a customer. So that customer goes immediately to you. And there you are. There's your picture there, a little smiley face. Because you're watching The Voice. You're watching old Tom Jones. You think he's wonderful. And Wile E. Coyote, I think that's his name, isn't it? He's got some other name. Anyway, I think it's a great program. And suddenly you get a text message saying that Mr. Brown from Dundee wants to talk to somebody about a mortgage. and you get a lead. You pay 25 quid, you get this lead. And what you do with that lead is entirely up to you, because this is where the clever part comes in. Because what you need to do, now you've paid for the lead, you need to make sure that lead turns into business. So you've got to contact the customer. So you now need to have a decent or half decent sales process in place. Now, if you haven't got a sales process, give me a call and I'll take you through how it works. You've got to have a sales process. You've got to have a funnel of some description, because the funnels themselves help you to produce business. If you've got somebody coming into you as a lead, you've got to be able to make a phone call or text them or WhatsApp them or social media them, whatever is your preferred way of communicating. And remember, it's not your preferred way, it's your customer's preferred way. And you want to take them to your stage of the sales process, which is probably some kind of meeting. So you want to contact them and sell the next stage in your sales process, which is probably a meeting of some description. So you need to measure that. So you want to have kind of like ratios. So for every 2 leads, you want to achieve 1 meeting. And for every 1 meeting, you want to achieve 1 mortgage. You've got to have ratios now to help you to measure these things, because these 25 quids will start adding up. And it won't just be 25, it might be 50 quid, £100. So you need to make a call, a WhatsApp message, whatever. You need to be good at this. You need to get fluent in the way that you handle the call or the message. You need to obviously be compliant to make sure that your network tells you what to do, what not to do. You need to be enticing and interesting, but ultimately you want to take the customer to your next stage of your sales process. Don't get drawn into giving information over the phone and sending quotes and all that palaver. You don't want to do that. The way you work is your next stage then is some kind of meeting. So when you do your next meeting, be a bit more flexible with that one. You could use Zoom or some kind of software. I use Zoom, really good company, to do a video meeting with Bob from Dundee. It may well be that you're in Brighton, he's in Dundee. Your video meeting might be the next step. And people like these things. So make sure, it could be a face-to-face, it depends on how you operate. And you can buy leads, of course, that are in your area if the customer's told you where they're coming from. You can specify the type of lead you have. So take it to your next step. You've got to have a sales process. You've got to have a robust sales process that has elements in each part that you can measure and make it go through as well. Other things you could do here, you could do advertising online. You could do Facebook advertising. That's really clever stuff now, if you ever thought about that. Get onto Facebook, get your account sorted out, and start looking at advertising on Facebook, because you can do all sorts of things there. You can determine the geography in which your customers come from, or your advert goes out to, the age range of the person you want to promote your advert to, the demographics, or whatever it is. They have lots of these criteria with Facebook where you can put an advert out and have it appear in somebody's feed on Facebook, because that's where people are talking about mortgages, aren't they? So it's a good place to go. Facebook advertising is not expensive. It's one that you might want to take a look at as well. Make sure you have a referral management system built in as well, because these leads that you eventually turn into business, you want to be turning those into referrals, getting their friends, relations, whatever involved as well. That's the best way in which you can maintain business. Referral management systems start, by the way, at day 1 or at the meeting process. You've got to have a system in place for that. Now, Santander are very clever. They basically just bought all this, haven't they? So they'll just get streams of customers coming their way. And they'll probably end up closing all their branches because they don't need them. They can only do this all online moving forward, which is the way to take it, isn't it? So that's prospecting, modern way of doing things. The world changes. Hope that's been useful. Bye. There you go, a little tip there for you. We're wrapping up things now. Monday morning here in Cheltenham, all good here. Cheltenham Festival starting, getting very busy out there. Hope you're going to have a great week. We're going to see you next week, hopefully. Remember, it's paul@paularch.com. What else do we talk about? Yeah, boot camp starting, late spring boot camp coming on 23rd of March. So if you want online learning for your CMAPs, video-based learning audios, it's good stuff. It's not like, click on there and you get a page to read. I'm not going to get a book and do that. No, this is real online learning that we have with live stuff as well, coaching, all done online using video and that stuff. So get onto the website, archertraining.co.uk, paul@paularcher.com. So do subscribe if you haven't done so below. Talk to me, email me, happy to help in any way I can do. Have a great week. See you all soon. Bye.